The Sydney market continues to perform at a high pitch, with the number of growth suburbs down only slightly on the record levels of the previous quarter. In our autumn survey of sales activity, which we published 3 months ago, we identified 140 suburbs with rising sales activity, up from 93 the previous quarter. Now, in our current survey, the winter one, we found 121 suburbs with rising activity, compared with just 24 a year ago. Now, this means that recently, Sydney overall has tapered marginally, but still has the second highest number of growth markets in the 6 years we have been conducting our quarterly surveys. This continues to translate into exceptionally strong price performance, with notable uplift over the past 3 months. In particular, in terms of sales activity, the sectors which have shown notable improvement in our winter survey are those which offer a degree of affordability, locations that are a tier or two above the bottom end, but a little below the middle market areas. Now, they form two general growth precincts, west and south. The notable growth markets of the west are the municipalities of Parramatta, Cumberland and Blacktown. And the other cluster of growth LGAs is south and southwest of the Sydney CBD, the municipalities of Canterbury Bankstown, Georges Rivers and Sutherland. The price performance across Sydney in the past 12 months has been extraordinary. Of the 223 suburbs and our price analysis, 97% of them have recorded growth in their median house prices, including 88 of them with increases above 10% and some of them above 20%. Apartment markets have also shown strong recovery signs, with 8 out of 10 suburbs delivering annual increases in their median prices, most of them above 5%. Now, there are multiple growth suburbs in precincts right across the Sydney metropolitan area. Another perspective on price movements is provided by the level of uplift in the past quarter. Here are some examples from across the Sydney metro area. And in the suburb of Lindfield, houses are up from 2.75 million to 3.12 million, and units from 1.2 to 1.33 million. Croydon, houses up from 1.57 million to 1.77 million. In Cogra, houses up from 1.3 to 1.4 million. Kirrawee, units up from 690,000 to 740,000. Canley Vale, houses up from 810,000 to 880,000. These examples show extraordinary increases in median prices in just 3 months. And there are dozens of similar examples across the Greater Sydney area. And this week, we've published our new edition of the Top 5 Sydney Hotspots report. And in preparing this report, we've sifted through all that information and chosen 5 areas of Greater Sydney, which we think have good prospects for growth, taking a medium to long-term view. So get yourself a copy and have a read to make sense of the current market frenzy in Australia's biggest city.